Hewison here, co-founder of MarketClub with your 1 p.m. market update for Thursday, the 18th of August. The trend is your friend, and how true those words are today. Readers and listeners to this report know that we have been on the right side of these markets for quite some time. In fact, it's in times like these when technical analysis really shines. It doesn't matter if you have a strong upward trend like we have in gold, or a downward spiraling trend as we have in stocks. Technical analysis and trade triangles work. In case you missed our last night's show, MarketClub's last night TV show, you may want to check us out here and see what we're saying about the market and the bank stocks in particular. Right now, we feel we have a very target-rich area for trading opportunities. Some of the best money can be made during periods just like this. The key is being successful in the markets, is having large moves, is to be disciplined and follow MarketClub's trade triangles. So let's go to the 6 major markets that we track every day and see how we can create and maintain your wealth in 2011. However, if you want to give us a call, MarketClub TV phone line is open now, 410-867-2100, extension 129. Leave us a message about the markets, about what you think, how you use MarketClub, and how we can help you understand how the markets really work. So let's go to our portfolio, and here we are at our portfolio, and you are going to be looking at the S&P 500 cash. You see the big downward move here, and this was a clue yesterday when we had very little volume and we created this doji line right here as we talked about it. And we talked about this on the show. This is a low volume rally. We had the Fibonacci retracement, which was I think around 38%, but we'll just put that in right now and see what it is. So here we are. We go to the Fibonacci tool here. We click on the high here, drag this down, and there it is, 38.2%. We said if it can't get over 38.2%, it's a very, very weak market. And of course, that's exactly what happened in this market. And we're expecting this market, which is now lower for the week. If we close down here, I think the lowest close we've had on the S&P 500 this week is right around, I think around 1120, 1119, and 1120. I think if we close below that level, which is about another 25 points lower, I think that's going to be extremely negative. This market is going to, it's a bear market. Bear markets tend to just erode, erode, erode. And I think that's the key level to look at right now. So anyway, I expect to see this market under pressure later today and tomorrow. I don't think we'll see some miraculous move back up. I think this is just going to be a continuation of the problems in Europe, which obviously have festered over here. The bank problems, the banks are the biggest movers today, and we've been right on top of those with Bank of America, Citibank, Wells Fargo. We've covered all those markets, and we've been very, very accurate in them. So let's go to our next market, and that's going to be the silver market. And this is somewhere this is something to consider. Do not buy silver because you think it looks cheap in comparison to gold. The reality is our trade triangles are mixed. They're 75. The weekly's down, the daily's up, and the monthly's up. We want to see the weekly hit a green triangle before we get excited about being long silver again. Right now, it is in a trading range, and you can see quite clearly, and I'll just draw this to the telestrator, is we've just been going sideways really for right here and right here. So very, very little going on. Got to be careful with that. I would say the best thing to be is on the sidelines in that market and just bear with what we're doing. So I think generally speaking, you're going to see more sideways action in silver, especially if we don't get any really big moves taking out these highs. I just see sideways, sideways, sideways. So the one everyone's focusing on is the next market we're going to be looking at, and that market is, of course, gold, which is at a new high. However, and this is the important element to think, the previous high was 1,814.41. We're 1,817.76. This is a real time where you have real-time prices. We've just poked out of the top of the trade channel, and sometimes when you see that happen, like we had here, the market pulls back. I would not be surprised to see that happening. And the other thing is, what you want to be careful of is we just made new highs, but the momentum has not made a new high. So if this turns down, possibly, you want to be very, very careful right here. But I think the trend is clearly up. We've been long this market from $14.30, almost $400 ago. And again at $15.57, the last signal was $16.28, which is basically almost $200 ago. Lots of profits in this market, just using the trade triangles, not listening to anybody else, but just following these simple signals that we share with you every day. So let's go to our next market. The next market is the crude oil. Now, crude oil is interesting because I expected crude oil eventually to go higher. I still think that's going to be the case, but the reality is the market was telling you, the trade triangles were telling you right here at this level, let me just take this off here, but right here at this level at 94.02 on the 1st of August, we had a signal to sell crude oil. And look what's happened. We're currently trading $11 lower right now. That's $11,000 per contract based on our trade triangles trading one futures contract. So again, the trend is up. This move here was not, we consider this type of formation not a positive formation. We explained that in the video, which I'd like you to watch if you have a chance from last night's show. Let me just draw that in for you to illustrate what I'm saying, and that is when you have a move that comes down, the market, the steeper the move down, like right here, like this, and then you have this type of move, that's a flag, and that is usually a negative continuation pattern to the downside. So I could see potentially maybe we'll see the crude oil go down and test the $75 to $70. I don't know, but the trend is definitely in favor of being short crude oil based on our analysis. We've got our monthly 95, which came in earlier. That was the clue right back here, and 94 on the weekly and 84.40 on the daily. So here you are. It's minus 100. Very, very negative trend, and that's because people are thinking there's a contraction. It doesn't matter what we think. The market's going down. So let's go to our next market. Let's clear everything off the screen and go to our next market. And that is the dollar index. What is so interesting about the dollar index, I'm going to put my illustrator back on the screen here and share this with you because it's unbelievable what we've seen, and that is this market has literally just gone sideways, period. Look at that. That's just a massive sort of trading range. Every time it gets down to 73.50, it pops up, and every time it gets around 75.50, it pops down. So that's the range, and this is the dollar index. This is a market that's trading against a basket of currencies right now. It still appears that people want to own dollars as badly as this is, and here we are with our plus 60, and that is plus 60 is a trading range, and that means you should be trading this using our Donchian trading channels as well as the Williams percent R. We've shown you how to do this many times on these shows, and let me clean everything off the screen and you'll get an idea of what I'm talking about. And we go down here, you can see the market was oversold. It's coming back up. We're oversold at the bottom of the Donchian trading channel. It was minus 60, meant good chance it's going to see a rally. So again, every time you get down here, like here, you're out of the channel, boom, it comes back up, boom, it's going to come back up again. It's just the way this market has been acting. It's kind of interesting to see these periods when it gets just down and it oversold, it pops back up. Just down here, it pops back up. And of course, when it gets to the overbought situation like here, and I'm using standard analysis here. I'm not using anything. The Williams percentage indicator has been around for a long time. I'm just using the default setting, nothing special, nothing more than that. And it just shows you how successful you can be using a trading channels and a oscillator. This is an oscillator. This is not a trender, it's an oscillator. So you're looking for overbought and oversold conditions on this market. Let's go to our last market, and we know that's the CRB index, which is the inflation index. We talked about this yesterday. We put the Fibonacci number in here, and if you draw this down, you can see there's almost a perfect retracement, and it turned back down, and exactly a Fibonacci retracement, the trend is down, and it looks like we're going into a deflationary type scenario, which is contrary to what I expected. We expected an inflationary, somewhere along the line here, not right away, but an inflationary spiral. So I think generally speaking, we can see this market doing more on the downside until it basically comes to a change. We're going to wait for our trade triangles. We're not going to guess this, try to think outsmart it, just really looking at the trade triangles. And look, there's a lot going on. There's a lot of opportunities here. And I want to share with you a couple of things here. And one of them is, obviously you can call the show. We'd love you to do that. And here's the number again, 410-867-2100, extension 129. Give us a call. Let us know what you're doing. Tell us about MarketClub. Tell us how you like it, how you like to use it, how you'd like to find out. We have a special right now, $8.95 for 30 days of MarketClub. You won't find any better service on the web. I can guarantee you that. So join the club, MarketClub. It's where members profit. I'm Adam Hewison. I'll see you tomorrow at 1 o'clock right here, so stay tuned.